Hey, hello everyone. In this studio video, we are going to discuss about the finance subject. It's theoretical. Chapter 1, Introduction of Financial Management. In this chapter, we're going to talk about the concept of financial management, its importance and responsibilities of financial management, and function of financial management. And then we are gonna go ahead and talk about the what are the factors that attract, that motivate corporate manager to act in shareholder interest. And then we will be touching on the most important topic for 15 marks long question answer, which is profit maximization goal and wealth maximization goal. So let's begin with financial management. So financial management can be defined as the decision making process of this managerial decision related to investment, financing, dividend, and capital assets management of a corporation. Where to talk about its importance and responsibilities, they are help in setting clear goals, help in effective utilization of resources. That's the number 2 point. And number 3 point is helps in making dividend decision, helps in making investment and financing decisions, and helps in analyzing the market risks and situations, help in deciding sources of finance. So these were the importance and the responsibilities of financial management. Now let's get back to the topic and talk about what is the function of financial management. There are two functions: a managerial financial function and record financial function. Okay, managerial and routine. Okay, managerial financial function and routine financial function. Usually in exam, you could be asked, as instead of managerial financial, what are the function of managerial financial function. Instead of that, you could be asked like, what are the CEO, chief executive officer, uh, financial function. This could be asked. A chief executive officer or manager finance, it means managerial. Okay, so here, what are the function of managerial function? So they are decision, investment decision, financing decision, dividend decision, and working capital decision. Now let's talk about the routine financial function. It has into the five function, which is record of financial transaction, reporting to the top level management, and supervision of cash receipt, cash payment, and safekeeping it. Now the fourth one is supervision of fixed assets and other current assets. Last one is safeguarding of cash balance and you know safeguarding of cash balance and valuable paper. Likewise, um, insurance policies, documents, you know contract valuable papers, and certificate of property, which is really necessary, which is very important. Now let's talk about the what are the factors that attract or motivate corporate manager to act in shareholder interest. Number one is managerial compensation. Obviously he will getting the more paid. Suppose that if I am a manager of a firm, if I'm gonna work under someone, obviously I will try to make them impress, and I'm getting my salary job, and if I do something huge for them, then they're definitely I will get the compensation, which is a managerial compensation. So this attract them to work for them, even if whatever the cost, they will work day and night to earn more money. So it attract them and motivate them to work for the shareholder. Number two is the threat of firing. If they did not, if I did not follow their orders, rules, then they could fire me. Number three is the threat of hostile takeover. It means that if our company is taken away by other company, if purchased by other company, then due to the low that our, I don't know what it's called, but yeah, if other country take over our country, then they will have rule over our country. So yeah, obviously they will have now the next company who will be you know now the next company who will be running this place which where I am working. They will obviously fire me, or they could you know put me in somewhere, another position. So yeah, that is also one of the threat of hostile takeover. That's why they work really hard, so the company could not take over by other, and they can have their position and earn a lot of money. And the number 4 point is direct intervention by shareholders. Suppose that when they are working, if as a shareholder someone suspect me, if they direct come and interfere in my work, like they were watching me closely. So yeah, that's also one of the point to be noted. That's why they work really hard. Now let's talk about the profit maximization and the wealth maximization. It's really simple. I just want to keep it short because I have a canker sore on my lips and tongue, which is making a lot harder for me to talk. Alright, now let's get it back quietly. What do you mean a profit maximization? According to this goal, the profit maximization goal, managers should take decision when managers should take decision, like managers should only take decision according to this goal. Managers should only take decision that increases the profit, and the decision that decreases the profit must be avoided. Look here what I'm saying. Manager, as a manager, you should only take decision when profit is increasing. Okay, if a manager, as a manager, if you know that the profit would decrease if you invest in this particular area, in this particular thing, then you must avoid it. Okay, that's the profit maximization goal says. And it is fully oriented toward the profit maximization goal. And for decision making, there must be a profit maximization. Okay, it's the main criteria for decision making for a firm. If manager want to make decision, then there must be profit maximization. And what are its drawbacks, limitation, and criticism? Ambiguity. Ambiguity means unclear profit. We don't know if there would be how much profit. We just invest. Okay, if we even manage to see a little bit of profit. Number 2 point, it does not consider time value of money. Number 3, ignores quality over benefit. Number 4, unsuitable for modern business organization. Now let's talk about wealth maximization goal. According to this goal, managers should take only decision when that maximizes the wealth of shareholder. Okay, if shareholder wealth is maximizing, then only manager should take decision. Otherwise, you could say as, now let me explain once again. According to this goal, managers should take decision when wealth of shareholder is increasing. Okay, the manager should only take the manager should only take decision when when that decision maximizes the wealth of shareholder. It's same as profit, but it's a bit different. It follows some rules. In profit, we had, if there is increase in profit, you gotta invest. If there decrease in profit, just avoid it. But here, if managers should take decision, if okay, if it maximizes the wealth of shareholder. And how it is determined? When net present value is positive, then it creates wealth for shareholder. If net present value is negative, then it creates, you know and it creates you know it doesn't create, it destroys the wealth for shareholder. So in wealth maximization, the only uh, so in male wealth maximum, only project with the net present value must be accepted. So it follow the rules. In wealth maximization, whatever you do, it only follows the net present value. If it's positive, then okay, you can invest. If it's a negative, then it destroys your wealth. So yeah, it just follow the net present value. And in wealth maximization goal, only project with the net present value is accepted. Now let's talk about its advantage. Not advantage, it's importance and arguments. It consider time value of money, consider quantity and benefit both, and suitable for modern business organization, clear profit, emphasizes cash flow, recognizes risks. you know it represents both interest of manager and shareholder. Alright guys, this was the introduction of financial management. Here, profit maximum goal and wealth maximum goal I had explained shortly. I didn't explain briefly because I know how to write a briefly answer. I have written as well in my notebook. So this was the 15 marks question, and it's really important. This year, BBS second year, in my first exam, partial exam, we had this internal exam. We had this 15 mark question, but I did not study at all at that time. So yeah, I just came back from exam, just leaving the question. And yeah, we just discussed about the financial management, its importance and responsibilities, its function of financial management, its really importance, and what are the importance factors that attract or motivate a manager to work more for the shareholder interest. Alright guys, this was the topic, and I hope this video would help you to learn a lot. Thank you so much for watching till the last. Take care, bye bye.